Welcome to TradeTheMBI.com. This is John. This report is for the 14th, and well, aren't we all on pins and needles waiting for the inevitable? It's amazing how every time the Fed situation comes through, everyone gets, all worked up, and usually you have a pre-up trade leading into it. Now, we've had a strong move from steel short-term buyers here. We got the pivot lower from shorts, a little skeptical of the situation, and a little bit of easing of the long-term buyer red there, which is getting it out of the overbought conditions. Still very close though. We've been in yellow-red range, which means we still have the potential for the dip all the way down to that 59 range. Not bad. Just going to take a new influx, and I don't know that middle of the month you're going to get quite that, but at this particular point, I think we're just stuck here waiting for the inevitable. I mean, we had like so little movement the other day, it was ridiculous, like watching paint dry. But it's going to start to explode. There's no question about that, without any question. Regardless, now there's talk of the Fed getting even more aggressive. Some of that speculation, I think it's a little extreme. It's still way ahead of the game. Even if you're believing in the pro-growth policies, you actually have to see that translate into actually real data. Now, if they decide to do something a little more extreme, that certainly will put the kibosh on any attempted growth. So the Fed can still counter any of the politics going on if that's what they're choosing to do, which would seem counterproductive, but there's not necessarily the same view about growth. And this, it's very interesting because you still hear all these people talking about full employment. 90 plus million not in the workforce, and they still think that we're at full employment because of the way they decide to count what is unemployed. Is very interesting. NQ still a little bit stronger. ABM continues to rise. I mean, this has been a long run coming off of even lower. We had buy signals come through. That's all you can count on. I mean, at this particular point, there's still a lot of uncertainty in the euro. The central banks keep floating right at that key point. So as long as that holds up, you don't have any major uncertainty. If the rate rise in the U.S. is significant enough, then that could put a lot more pressure on the euro, and that throws in a whole lot of other dynamics. This is no surprise. I mean, how many months have I been calling for that retrace down to the 113? We've just been waiting for the market to realize that they don't have a choice. Rates are going to be going up, and that is going to force yields into really interesting situations. It's going to help banks, that's for sure. They haven't exactly been doing poorly converting everything to their fee-based structures, and that has been very effective for them, despite low returns on everything else, even treasuries. Oil, again, the spigot is unlimited now, and I think the market is starting to realize that as shale and some of these other things, fracking, are able to adjust their cost basis now that they're allowed to export, certainly is going to continue to put pressure to the downside. I know that was funny. We were talking about some of these people doing long positions right as we were getting the shorts. We broke into a DOC spread. Well, geez, from way back over here when it first happened, kind of held flat for a while. But once we got below the green ABM, it was just a matter of waiting for it to settle back. Just retracing all the way from the earlier breakouts. There's still potential for it to go a little lower. You get into a threshold where obviously economics matches it, but there's such a huge glut, and a lot of it's being stored on ships and things like that, and there's just only so much room. And until you see the economic driver turn that around, I think oil's got more problems. It's still good for the consumer, though. Gold should start feeling a little strength here, but I don't know how sustainable any little pop back. I would expect us to come back up. I mean, if we ran a Fibonacci from here, we would probably, we'd have to shrink the chart and everything, but even the first turnaround on this, because of the amount of decline in that red DOC there, it's going to be up and then revisit the bottom, and we're still below the red line, so still net selling going on in gold at this particular point. So here was the ES. I mean, we started out the day absolutely nothing. All we did was we popped up a little bit, didn't even get overbought with that. And here in the pre-market trade, they're just soft pedaling it right back to the lows. So nothing, it's actually going to revisit the low right down over here off this dip below the red line. So, yeah, 65 range, we're just about there within a point, which would put us very close to what that target range was. So, all in all, not bad. It's just impossible to really do a whole lot with this because it's just not enough range. This is like one of the more significant moves. I mean, coming off of the accelerating buy that took place right in here, I mean, it was just a short move. But that is what it is, and there's nothing you can do about it. You just have to go with where the market is at this particular point, and I think there's just really a lot of uncertainty for them. That no one wants to be out, but yet they're all terrified that this crash is about to happen. So fear is usually a good motivator, and there's always a counter trade to it, and so that's what makes things a little bit more interesting. The reality is the reduction in regulation, improved employment situation certainly is going to aid in the deficit category, which actually will promote more business growth, which becomes sort of a contagion. This is where psychology, I think in a lot of cases, people forget economics of things. And this is the whole point about buying the rumor and selling the news. This whole lead up has been the rumor from after the election. Once you start seeing the results come through, that's when I think we'll start to see some pullback trade that goes back and forth in between, which is perfectly normal, and I think that we'll be right on top of it. So far, no complaints with how it's gone. We still were looking for movement up to the 76. We didn't quite get that. It's a little bit of a concern with this breakdown. We needed to get back up to these previous ranges. It looked like we were starting to head that way, but pretty soft in the pre-market here, and we had a strong move of the DLC orange, and as soon as that happens, we know that we're likely to see a little bit more carry through to the downside. Then we have the low liquidity after hour, and they can do a little bit more than you would expect, and then it turns right back. So I'd still expect to see move back up to there. I mean, we already get the shakeout though, moving negative, so I would expect that low to be revisited, and then we can talk about move back up from there. So all in all, not horrible, but I'll keep posting the charts on the Skype chat and that. Trade well.